So for one major hyperscaler out there, the network capacity that connects just 2 of their AI data centers, it now requires double the total global internet capacity built over the entire last decade.
Which is just a completely insane metric.
2 buildings.
Yeah.
And it requires double the bandwidth of 10 years of global backbone infrastructure.
Yeah. The scale is just, hard to even visualize.
Right. So today we are doing a deep dive into the physical pipes that are handling that impossible amount of data. Specifically, we're looking at the Q4 2026 earnings call for Lumentum Holdings.
Ticker symbol LAEE.
Right, LE. And the mission for today is to break down this highly technical Wall Street transcript and extract actionable insights for the retail investor.
Yeah, because we really want to look at how this AI software boom is filtering all the way down to the hardware level.
Exactly. The optical networking space. Because AI is eating the world. Right.
Right.
But it can't do that without moving massive amounts of data.
Right. It's physics.
Yeah. So we're going to figure out if Lumentum is the bottleneck or the enabler here. And we always start with the scoreboard.
Right. The headline numbers.
Because we want to see if they're actually making money from the AI hype.
Right.
And Lumentum's headline numbers are frankly staggering.
Oh, yeah.
Q4 revenue hit $1.01 billion, which is a 109% year-over-year surge.
And that's just top line, yeah.
Right.
Seeing a physical hardware manufacturer double its top line in 12 months, it completely breaks standard models of manufacturing growth.
Right, because it's not like sauce.
Exactly. Like a software company spinning up more server space to double revenue is one thing.
Yeah.
But to do this in the physical world means you're navigating global supply chains.
Yeah.
You're sourcing exotic raw material,
Right.
expanding these highly sensitive fabrication plants.
Clean rooms and all that.
Yeah, and you have to keep your incredibly delicate manufacturing yields intact while doubling output.
Which is almost impossible.
Well, it is. Hitting that $1 billion mark and marking their 8th consecutive quarter of top-line growth, it requires a flawless supply chain execution.
Flawless. Yeah. And the profitability followed suit too. So non-GAAP earnings per share came in extremely strong at $3.23.
Yeah, which is a great beat.
Right. But the metric that really just jumps off the page in this transcript is the gross margin.
Oh, absolutely.
So the non-GAAP gross margin crossed this massive psychological and financial threshold. It landed at 50.4%.
And we have to talk about why that specific number is so important.
Right, because management had previously telegraphed to Wall Street that they were targeting a 50% margin profile.
Right, but they explicitly stated they wouldn't get there until they were hitting a $2 billion quarterly revenue run rate.
Exactly, so they hit 50.4% at just $1 billion in revenue.
Half the expected runway.
Right, which means the underlying mechanics of their manufacturing are tuned way, way ahead of schedule.
Yeah, it's like a marathon runner hitting their target split time by mile 5 instead of mile 15.
Oh, that's a good way to look at it.
Yeah, I mean, it just shows incredible operational efficiency. And management points directly to their manufacturing utilization to explain that early margin victory.
Okay, break that down for us. What does that mean in this context?
Sure. So in semiconductor and optical component fabrication, your fixed costs are just astronomically high.
Right.
You are paying for the clean rooms, the incredibly expensive lithography equipment, the etching machines.
And the talent.
Oh, yeah, the specialized engineering talent. You pay for all of that regardless of how many units you actually produce.
Okay, so it's like the airplane analogy for factory physics.
Right, exactly. An airline pays the lease on a 747, whether it's sitting on the tarmac or flying across the Atlantic.
Right, yeah.
If you fly it half empty, your cost per passenger is terrible.
Yeah.
But if you fill every single seat and keep the plane in the air constantly, your fixed costs are spread over maximum revenue.
And your margins expand exponentially.
Exactly. Lumentum is running their fabs at max capacity right now, so they're spreading those massive fixed costs across a record number of units.
Wow. And they also mentioned they're benefiting from a highly favorable product mix, right?
Yeah, so they're selling more of their advanced high-margin lasers, and they're exercising some serious pricing power.
Because everyone needs these parts.
Right. In a market where hyperscalers are just desperate for components to string together these 100,000 GPU AI clusters, the companies supplying the bottleneck components dictate the terms.
So they have total pricing power.
Essentially, yeah.
Which transitions us perfectly into the story behind these numbers, because we need to look at what they are actually selling that gives them this kind of leverage.
Right.
So components revenue was up 103% year over year to $649 million.
Huge jump.
Yeah. While systems revenue was up 23% to $357 million.
Right.
So translating the telecom jargon here into plain language, the main drivers of that component surge are transceivers and the specialized lasers inside them.
Yes, exactly.
And the fundamental problem they are solving is that traditional copper wiring is just failing under the weight of AI.
It really is. I mean, copper is hitting an absolute physical limit.
Really, like a hard limit.
Yeah. Historically, data traveled over copper traces on a motherboard to the edge of a server rack.
Wow.
But as data speeds push past 800 gigabits per second, and now they're moving toward 1.6 terabits per second, a phenomenon called the skin effect takes over.
The skin effect. Okay, what is that?
So high-frequency electrical signals, they actually get pushed to the outer surface of the copper wire at these speeds.
Just the outside.
Yeah, they don't use the whole core of the wire. And that massively increases electrical resistance.
Oh, wow.
And that resistance generates an immense amount of heat, and it requires a prohibitive amount of power to push the signal through.
So you're basically building a heater.
Right. At these speeds, an electrical signal degrades over just a few inches of copper.
A few inches. So the copper is essentially acting like a giant resistor, just melting down, trying to keep up with the GPU clusters.
Mm-hmm. Exactly. So the only solution is light.
Right, optics. And the transcript notes record shipments of 800 gig cloud transceivers. And they are already rolling out next generation 1.6T modules.
Right. 1.6 terabit.
So a transceiver takes that electrical signal from the GPU, turns it into a pulse of light using a laser, shoots it down a glass fiber optic cable, and translates it back to electricity on the other side.
Right. And moving from 800 gig to 1.6T, that is a monumental leap.
Give us some context for that. How fast is 1.6 terabits per second?
So to put that in perspective, 1.6 terabits per second is roughly equivalent to transmitting 50 full-length, high-definition movies every single second.
Oh my God.
Over one connection. And as AI models scale, GPUs constantly need to share weight updates and parameters with thousands of other GPUs simultaneously.
Right.
If the network between them is too slow, those incredibly expensive GPUs just sit idle, waiting for data.
So you're paying for compute that you aren't even using.
Exactly. And Lumentum noted in the call that they appear to be first to market in many instances for these 1.6T designs.
Wow, beating out much larger competitors.
Yeah.
And it's not just about connecting different server racks together anymore either. I noticed the transcript is heavily focused on terms like NPO and CPO.
Right, near-packaged optics and co-packaged optics.
Yeah, so if copper degrades over just a few inches, you can't even get the signal from the center of the motherboard to the edge of the rack.
Exactly. You lose the signal before it even leaves the board.
So NPO brings the optical engine right next to the processor on the same circuit board.
Yep.
And CPO integrates the optics directly onto the chip's actual substrate.
Right, so you are ripping out the copper traces entirely.
And replacing them with lasers and glass right at the processing source.
Exactly. But doing that requires incredibly specialized lasers. And that is Lumentum's core moat.
Okay, let's talk about that moat.
So they manufacture mid-power and high-power indium phosphide laser chips.
Indium phosphide. Because silicon is great for crunching numbers, but from what I understand about the physics, it's practically useless for actually generating light.
Yeah.
Right. Silicon has an indirect band gap,
Okay.
which means when you pass a current through it and electrons jump energy states, they release energy as heat, not photons.
Okay, so it just gets hot.
Right. It's highly inefficient for light generation. Indium phosphide, on the other hand, is a direct band gap material.
Okay, so it throws off photons efficiently.
Exactly. It creates a powerful, stable laser beam. But indium phosphide is brittle, it's difficult to work with,
Right.
and it requires highly specialized fabrication plants, and Lumentum owns these specialized fabs.
Giving them a massive structural advantage.
Oh yeah, over any company trying to build optical systems without internal laser manufacturing capabilities.
Right, they have to buy them from Lumentum anyway. And that structural advantage really shows up in the demand metrics. I mean, management highlighted an 80% year-over-year surge for their pump lasers alone.
Yeah, 80%.
And they stated that they are effectively sold out for the foreseeable future.
Sold out, which is huge.
But as an investor, I have to be honest, hearing phrases like sold out and 80% surges, that triggers alarm bells for me.
Why is that?
Because it sounds exactly like the pandemic era semiconductor shortage. You know, where companies double ordered out of panic, and it created this massive bullwhip effect that inevitably crashed when the supply finally caught up.
Right, the hangover.
Yeah. I mean, I have to wonder if this is just a frantic over-ordering phase that leaves Lumentum vulnerable to a massive demand cliff next year. Like, is this just a bubble?
It's a very fair question, but management addressed that exact fear head-on in the call.
Okay, what did they say?
The transcript outlines clear evidence that this is a permanent structural architectural shift rather than just panic hoarding.
How do we know that?
Well, Lumentum has secured multiple long-term customer agreements to offset their capital expenditures.
Oh, really?
Yeah. Customers are putting hard cash down today to guarantee supply for 2027 and 2028.
Wow. Cash today for 2 years from now.
Right. We are looking at non-cancelable commitments for external light source, or ELS modules and high-power lasers.
Okay, non-cancelable. So they are locking in the raw physical infrastructure required to execute multi-year AI product roadmaps.
Exactly. Hyperscalers wouldn't tie up that kind of capital in non-cancelable contracts just to build buffer inventory.
No, that would be insane.
Right. And Lumentum is actively moving up the value chain to capture more of that spend.
Right. You mentioned ELS modules earlier. So instead of just selling the naked indium phosphide laser chips to customers who might, struggle with the complex engineering required to integrate them.
Because it's hard to work with.
Lumentum is packaging those high-power lasers into complete, ready-to-use modules.
Yes.
Yeah.
And that expands their addressable market to companies with less optical engineering expertise.
And I'd imagine that commands a significantly higher average selling price.
Oh, a much higher ASP, yeah.
Right.
And because they are locking in these multi-year non-cancelable commitments, it completely de-risks their near-term future. And we see that confidence reflected directly in their Q1 2027 guidance, which is the third major segment we need to analyze.
Yeah, let's look at management guidance. Because having established this massive structural shift, we need to know what they're promising next.
Right.
And the guidance is incredibly aggressive.
Oh, very.
For Q1 of fiscal 2027, they're projecting revenue between $1.225 billion and $1.275 billion.
Which is huge.
The $1.25 billion midpoint represents over 130% year-over-year growth.
Yeah, that acceleration is wild.
And what's crazy is they had previously outlined a roadmap at an industry conference to hit that specific $1.25 billion target. But this current guidance means they're going to achieve it more the full quarter ahead of their own schedule.
Right. And accelerating growth at that scale usually destroys margins.
Why?
Because you have to pay exorbitant expedite fees, run inefficient factory shifts, pay overtime to meet the condensed timeline.
Oh, right, because you're rushing.
Exactly. Yet their Q1 non-GAAP operating margin guidance actually exceeds the high end of their target model for that revenue level.
Wait, really? Even while rushing?
Yes. It again proves the operational leverage of their manufacturing footprint.
The airplane is full.
The airplane is completely full. Every incremental dollar of revenue beyond their fixed costs is falling almost straight to the bottom line.
That is incredible. Though, speaking of the bottom line, I want to clarify something for the listeners.
Yeah.
Because if a retail investor just glances at the GAAP net income on the earnings release, they are going to see a massive net loss for the quarter.
Right. And they might panic.
They will absolutely panic. So we need to explain the mechanics of the convertible debt equitization they executed.
Yeah, that's an important call out.
Because this GAAP loss is actually a sign of massive financial strength.
It really is.
Lumentum wiped out $1.1 billion of debt, which is about 35% of their outstanding convertible notes.
Right.
But they did it by issuing shares to the debt holders instead of paying cash.
Exactly. And because Lumentum's stock price has appreciated so heavily over the past year, the shares they handed over to settle that debt were worth vastly more on the open market than the original book value of the loan.
Right. And accounting rules mandate that the company record that spread, the difference between the carrying value of the debt and the current market value of the shares issued.
Right.
They have to record that as a loss.
Right, as a paper loss. So they basically paid off a massive loan using their highly valued stock as currency.
Right. No actual cash left the building for that $7.8 billion accounting charge.
Exactly.
It hits the GAAP net income line, but it aggressively cleans up the balance sheet.
It does. It removes the overhang of that debt. It slashes their ongoing interest expense, and it frees up cash flow.
Which they absolutely need.
Right, because they need that pristine balance sheet to fund the massive capital expenditures required to expand their manufacturing fabs in Japan.
And their newly acquired facility in Greensboro.
Yes, exactly.
Now, One of the core technologies driving the need for that expanded factory footprint is a product line called OCS.
Oh, this is fascinating.
Management highlighted this prominently. They are forecasting their first ever triple-digit revenue quarter for OCS in Q1. It's over 100 million.
Right.
For those who don't know, OCS stands for optical circuit switch.
Let's break that down.
Yeah, because the traditional way data centers route information is highly inefficient for AI workloads.
Very inefficient.
So historically, a pulse of light comes down a fiber into a switch, right?
Yep.
And it gets converted back into an electrical signal.
Right.
Then it gets routed by a silicon chip to the correct output port, and then it gets converted back into a light pulse to continue its journey.
Right, so it was an OEO conversion, optical to electrical back to optical.
Exactly. It's like taking a high-speed bullet train, forcing every single passenger to get off at a station, walk through the terminal, and board a completely different train just to switch tracks.
That is a great analogy.
Slow. And the latency and power consumption of that process are massive bottlenecks for AI clusters that require synchronized, real-time data sharing across tens of thousands of GPUs.
Right. Every millisecond counts.
So how does the OCS change this?
So an optical circuit switch eliminates the station entirely.
Wow.
It physically redirects the beam of light using microscopic MEMS, which stands for micro electromechanical systems.
Okay, what does that actually look like?
These are tiny physical mirrors etched into silicon that tilt on microscopic hinges.
Mirrors on hinges.
Literally microscopic mirrors. And they tilt to bounce the incoming laser beam directly to the correct output fiber in 3D space.
That is sci-fi stuff.
It is. And the light never converts to electricity. The data stays in the optical domain the entire time.
Wow.
So the power savings are immense and the latency drops to near zero.
Because it's literally just reflecting light.
Exactly.
Now, Lumentum has some severe supply chain issues early on when they were trying to ramp this product, right?
They did, yeah.
But the transcript confirms they have navigated those constraints. They are aggressively ramping internal manufacturing of these OCS units to meet the demand.
Right, because hyperscalers are redesigning their network topologies specifically around optical switching just to save power.
Wow. Okay, so bringing all of these threads together, we've got the margin expansion, the physics of copper versus light, the indium phosphide advantage, and the OCS ramp. We have a very clear picture of Lumentum's current standing.
We do, and it's a very strong position.
Yeah, which brings us to the bottom line. We have the numbers, the tech, the forecast. Let's distill it down for the retail investor.
Right.
So if you're looking at this stock today, the bottom line is unequivocally bullish.
Hard agree.
Lumentum is positioning itself as the premier picks and shovels play for the AI infrastructure build-out.
Yeah, they are not selling commoditized widgets that can be easily undercut by cheaper overseas manufacturing.
Not at all.
They possess specialized signal integrity engineering teams, and they own the proprietary indium phosphide wafer fabrication plants.
They own the means of production for the hardest part of the puzzle.
Exactly. And they explicitly noted that their continuous wave, or CW lasers, are commanding a significant price premium over the broader market.
Why is that?
Because the performance specifications on Lumentum's lasers are so tight and reliable that it dramatically improves the downstream manufacturing yields for their customers.
Oh, the customer's building the final transceiver modules.
Right. If your component saves your customer millions of dollars in wasted materials on their own assembly line, you hold all the pricing power.
Because they can't afford not to use your part.
Exactly.
And they are locking in that pricing power through those multi-year non-cancelable agreements we talked about.
Right, effectively de-risking their own factory expansion plans.
And they are beating larger competitors to market on the 1.6T transceiver designs. So look, if you believe the AI data center build-out is a multi-year secular trend, you have to recognize that these optical components are the fundamental bedrock of that infrastructure.
Right. The most advanced AI processors in the world are utterly useless if they are starved of data.
They're just very expensive heaters at that point.
Yeah, exactly. And Lumentum is manufacturing the optical fire hoses required to deliver the fuel to those engines.
I love that. Optical fire hoses. And their early achievement of that 50% gross margin target provides the ultimate proof point for me.
Yeah, me too.
It demonstrates that management isn't just riding a wave of demand. They know exactly how to capture the value of their leverage in the supply chain and translate it directly into bottom line profitability.
Yep, the execution is there.
All right, we've covered the numbers, the physics, and the financial mechanics of this quarter. But before we sign off, I want to leave the listener with a final thought to mull over.
Okay.
Returning to that mind-bending statistic from the top of the show.
Right, the capacity stat.
Just 2 AI data centers today require the equivalent of 10 years of global internet backbone network capacity to function.
It's still hard to wrap my head around.
If data requirements are scaling exponentially like that, at what point does the physical world hit a hard cap on this digital expansion?
Oh, wow.
We are already watching the physical limits of copper wire force a massive, expensive transition to lasers and glass. But what about the power grids required to run those lasers?
Right.
The land requirements for the data centers, the physical supply of rare materials like indium.
It's a great question.
The digital world feels infinite, right?
Yeah.
But it is entirely dependent on a physical world that is decidedly finite.
Yeah.
Where is the absolute physical ceiling of this infrastructure? Something for you to explore on your own.
Definitely.
Thanks for joining us on this deep dive. We'll see you next time.